What a year 2020 has been. It was the year that the world was turned upside down by the pandemic. Money has flowed out of some sectors and into others, creating some big winners and big losers. Oil crashed as the economy came to a standstill. E-commerce boomed as people decided to shop online instead of the high street. And tech companies continue to dominate. So this video is going to be quite a special video as it's going to wrap up 2020 and I'll be covering three main things. The first is asset class performance. How has everything done this year? And we'll take a look at stocks, bonds, gold, silver, crypto, property. We'll then take a look at how to prepare your portfolio for 2021 and also the coming decade. And number three, I'm going to reveal my personal portfolio so you get to see what I'm doing with my own money and also the reasoning behind it. As always, if you do find anything useful in the video, take 2 seconds just to drop a like. That would be much appreciated. Okay, sit back and relax, guys. Here is the asset class performance of 2020 and also some guidance on how to prepare your portfolio for 2021. So, starting with 2020 performance. Let's draw up a chart and we're going to look at the main asset classes. So we've got commodities and we'll be looking at the GSCI index. We'll look at cash. The bonds, we've got the 10-year treasury yield. We've got property, we've got stocks, and representing stocks will be the S&P 500. And then gold, silver, and crypto. So starting with commodities, and it actually has a negative 7%. This is largely to do with oil, as oil got absolutely smashed this year. Next up is cash. We put cash on because we do want to keep a portion of our portfolio in cash, and some people actually hold 100% cash. So just representing that cash will be losing negative 3% due to inflation. Next up we have bonds, and bond yields are just under 1%. Historically, they should be closer to 4 to 5%, so obviously they're depressed at the moment. Property. Now, property is quite difficult to do as every country is different, but in the West, average growth rates are about 5%. And it has had a strong year this year, so I've put that down as a 20% increase, so that will be 6%. Stocks and the S&P 500 as of right now has grown 14%, which if you think about it is excellent considering we had a 30% crash earlier in the year. Next up is gold. Gold has had an excellent year, 21% so far. Silver has had an excellent year, 44% so far, but the number one huge performer this year is crypto, and I've had to put it on a different chart just because it messed up all the rest of the data. So as you can see, once we add crypto, which has grown at 285%, it really has dominated all the other asset classes. So how do we build a portfolio for 2021? Well, the starting point is to actually take a look at what's going on in the economy right now. So we always want to take a look at the current environment. Here are some key things happening right now. Obviously, we're in the midst of a global pandemic. These are the daily new cases and daily deaths. And you can see we're actually starting the year in a much worse position as we did at the beginning of 2020. So this really could go either way. Cases could surge to all new time highs, or with the vaccines, we could see a bounce back economy. This is the buffer indicator. I won't spend too long on this as I covered this in my last video, but it measures corporate equities divided by GDP, and we can see we've had some big peaks that have been followed by crashes, and right now it's the highest level it's been in history, signaling that stocks are really overvalued right now. Another thing is the PE ratios, and the PE ratios, you can see this is what it was in 1929 before the big crash leading to the Great Depression. This was the dot-com bubble, and this is where we're at right now. So we've passed the 1929 levels, not quite as high as the dot-com crash, but it's still double the historical average. So this does also say that stocks are overvalued, but they still could go higher. And finally, this is the Federal Reserve's M1 money supply, and you can see in 2020 it's been a dramatic increase. So there is a huge amount of money printing going along. So we have to bear this in mind and think about which asset classes do well when the money supply is being increased. So as an investor, one of the most important things to continually work on and master is asset allocation. So here's an equal weighting, but your portfolio is probably going to be made up of either stocks, bonds, gold, silver, crypto, commodities, cash, property to some degree. And you have to decide, depending on your risk tolerance, your age, the size of your portfolio, and also your current knowledge base, which asset classes are you going to be allocating your money to? As promised, here is my own position, and I do want to start, before we look at my specific portfolio, it's always best to take a look at net worth, because this accounts for absolutely everything. So what do we have here? The biggest slice, 63%, is in property, and this is personal residence. We have a slice, 9.5% in silver bullion, 9% in stocks, 12% in crypto, and then a cash position. So where I'm personally at is I've spent the last couple of years heavily paying down my personal mortgage. So this is just personal preference and quite a defensive strategy, as once you are mortgage free, all your money can then go into investments. So now what I'm going to do is strip away this property section, as I will not be investing any of this money. And this is what the portfolio would then look like. If I would have started with this portfolio, you would look at it and think this is an extremely high risk portfolio. But as you can see, this is only a third of my actual money. So this means I can be much more aggressive with how it's invested. So you can see that it's 33% in cryptocurrency. Now, approximately half of that is in an index fund, which covers the top 20, and the other half is split between Bitcoin and Ethereum. I've got 17% in cash, so this is good for any market drops. It's ready to buy anything that goes on sale. Got 26% in silver bullion, so this is pretty much like being involved in the gold market. So silver always really follows gold, and it has done for 5,000 years. So think of the Earth going around the sun. That is pretty much like the gold market, and then it's the moon that follows the Earth. So it does follow where Earth is going, but it kind of swings around a bit. So when gold goes up, silver goes up in multiples, and when gold goes down, silver also goes down in multiples. So I prefer to be in silver, as there's a lot more leverage. And also, when we think about the industries and what's happening with solar and electric vehicles, they all use silver. So silver's not just a precious metal, it's also used in industry, which is why I particularly like silver over gold. And then 24% is in stocks. Now, half of this is a silver stock mining company, ticker AG, and the other half is a portfolio which I'm going to be migrating to over the coming years. And this looks like this. So this is a portfolio that I'm building in the background. So let me take you through it. What do we have? Starting in the top right, we have 20% betting in China, 20% the light blue in electric vehicles and solar. We've got 20% in cryptocurrency, 20% in tech companies, and 20% in cash. And the last 5% I've put down as fun, and this is my individual stocks, where I will put money into speculations. So I'd recently bought some QuantumScape, which has since doubled. It'll be stocks like Neo, where it's a bit more fun, a bit more speculative, but I wouldn't bet my retirement on these positions. So let's talk about benchmarks and answer the question, how do we know if we're doing well? I personally use three main benchmarks. The first is, did I beat cash? We could keep our money completely safe and 100% in the bank. So if you had any return at all, then you're doing quite well. The second and the main benchmark is the S&P 500. This represents the US stock market on a whole and is known as the market. We could keep things super simple and just invest in one single S&P 500 index fund. This grows at best on average 10% a year and it's known as trying to beat the market. If your total portfolio has grown over 10% a year, including all the winners and the losers, then you are actually doing really well. Amazingly, 95% of people do not beat the market over the long term. And the third benchmark that I have in my mind is Warren Buffett. In his early years, he's well known for being able to get 20% plus returns year on year. If your portfolio has done over 20%, then you are doing extremely well. In fact, at that rate, your money doubles every 3.5 years. So my strategy over the next few years is this. I'm going to try to beat the market. I'm going to be investing in sectors, mainly by ETFs, that I think will outperform the market. So the S&P 500 is made up of all the stocks and all the sectors, but some of the sectors will be outperforming. For example, electric vehicles and renewable energy, I think will outperform the market over the coming years. So my plan is to diversify into things that I think will outperform the market. Let's take a look. So let's look at it again. 20% in China. So China's economy is growing faster than the US. I'm diversifying here because I think it can beat the market. 20% in EV and solar, as I think this sector is going to outperform the market. 20% in cryptocurrency, as I believe crypto is definitely going to outperform the market next year. 20% in tech companies. Tech companies has outperformed the market this year over a 10-year period, 20-year period, and 30-year period. And then it's always good to keep a cash position just in case anything bad happens. So this is all done through ETFs. So the China slice is just an MSCI China ETF. The EV solar, I've narrowed it down and I'm very close to selecting which ETF I'm going to use for that, but that's still in progress. Cryptocurrency I explained on the last slide. The tech companies, I just use QQQ, or for people in the UK and Europe, it's EQQQ. So it's mainly an ETF portfolio, and this way I can put large amounts of money in it and it's still relatively safe. Now, for all of you eagle-eye investors out there, you would say that this actually isn't diversified as a lot of it is in stocks, and you are correct. So this is also how the portfolio looks. You can see this would be 60% in stocks, 20% in cryptocurrency for some leverage, and then 20% in cash, ready to buy if anything goes wrong. So as mentioned, this is a portfolio that I'm going to be transitioning to over the coming years. But it's just hard to justify buying a lot of stocks right now when the markets, I think, are really overvalued. So this comes to some portfolio tips, and my biggest advice and tips when it comes to building a portfolio are these. Don't copy any single one portfolio, because you don't know the full details. A lot of times when we look at these big billionaire portfolios, we don't see their cash position, and this really changes a portfolio. So my best advice, look at 50 different portfolios. I've got quite a few on my channel, so you can take a look at Warren Buffett, Ray Dalio, Jack Bogle. Take a look at all these big portfolios. You've now seen what I have done. Take a look at some other YouTube portfolios. The more portfolios you look at, the better and easier this is going to become. You get to see the strengths, the weaknesses, whether people are being defensive or risky. The more you look at, the more you're going to know what's right for you. As mentioned, you do need the net worth, as this will show the true picture of the portfolio. And if you don't see the full picture, then just take things with a pinch of salt. When it comes to a portfolio, it pretty much makes up the person's risk tolerance. A 20-year-old's portfolio is going to be different to a 60-year-old's portfolio. The size, a portfolio of only a few £1,000s or dollars is going to be very different to someone who has $100,000 Or it will be very different again when you have $1 million. And then also people's knowledge. So in one portfolio, you may see that someone's got a big slice in cotton. Well, if they've been studying commodities and cotton for 20 years and they know it's undervalued, they may buy cotton. Doesn't mean you should copy. And always bear in mind fees and taxes as well. A lot of brokers will charge when you're buying and selling. A lot of brokers will have platform fees, and you always build in a tax efficient way. So when it comes to selling, think about capital gains tax, and also putting as much as you can in a tax efficient wrapper is always best practice. So there you are, guys. What a crazy year 2020 was. And now is the time to build a plan for 2021. As with every year, my prediction is that 2021 is going to be a mix of opportunity with difficulty. Just remember that when it comes to the market or where the market is going, nobody actually knows 100% what is going to happen. So be sure to prepare for both directions. I did do a video recently on how to benefit whether stocks go up or down, so check that out if you haven't seen it. Where you decide to put your own money largely depends on your personal risk tolerance, how big your portfolio is, and also your current level of knowledge. I look forward to continue to share and help you guys the very best way I can over the coming year. I'll continue to share what the big investors are doing, like Warren Buffett and Ray Dalio, so we all can benefit. So just to say, I do wish everybody much success for the coming year, and a big thanks to everyone for being part of this channel. Just one favor to ask then, if you did find anything useful in the video, don't be shy, drop a like. That would be much appreciated. If you haven't yet subscribed, then be sure to click below and join us. I do have some great videos coming up that you don't want to miss. Any questions or comments, just post them below. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.